The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy.
On this episode of Pennies Going In Raw, we discuss shorting, position sizing, analyst price targets, and we answer some questions.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in raw.
Featuring Dan, Deity of Dips,
and Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going In Raw. Today is Sunday, August the 8th. Yeah, August the 8th. And, you know, we just had our first week of August, our first full week of August. And, you know, it wasn't as bad as people made it seem, or even that we may have made it seem.
I'm glad for you because I got smoked.
Well, then again, like I wasn't holding much and I was only really playing some large caps. And, you know, I also really enjoy trading around my wish position a lot just because, you know, it has those 50-cent days and, you know,
yeah,
I'm swinging a lot anyways. Might as well play with the volume it has. And, but no, I mean, what kind of made you struggle this week? Was it just your swings or plays or what?
I mean, yeah, it was a majority of the swing plays. We're still feeling like that downward pressure, and that's okay. But there's just not much volume in the market. So even like some of my swings, you know, I'm looking at them, and I mean, if I were to get out of them, sometimes I would be like 10% of the daily volume, and I don't like that at all. So, you know, it's just like that downward pull kind of, you know, I nibbled pins, you know, I have a good amount of pins. So, luckily that's back over 60, but you know, I started in on that too early.
So what kind of spooked me about Penn? Obviously, you know, Dave Portnoy is going to be Dave Portnoy. You can't hold back that beast. But whenever he tweeted the day of the acquisition, wasn't it, of that Canadian gambling company? Was that what the news was? Yeah. Tweeted something like, today we find out who's big brains and who's small brains as this tank proceeds to go down 5%, you know? And I'm like, yeah. Like right when I saw that tweet, I was like, A lot of gambling plays going on right now. Is that just because like football season's coming back? We're in preseason right now. And
yeah, I mean, football. Well, so the other thing is that if we're taking it from their business perspective, right now is probably their least busiest time of the year.
I mean, all that's on right now is baseball and soccer and the Olympics too. But.
Yeah, you have the Olympics, but as far as like, let's just say their normal operations, this is usually when they get all of their, this would be the time that they're doing all of their admin stuff because I mean, it makes the most sense. You know, it's their it's not their off season, but it kind of is their off season. So that's why we're seeing all these business transactions and them being inside the news right now. Is because because this is when, you know, they have their important board meetings, you know, and they start budgeting for next year. That, you know, things that most companies probably usually do towards the end of the year or the beginning of the year. This is like their calendar year for them.
Yeah. Do you think more gambling plays are going to kind of emerge, and do you think Penn will be the one that proves to be undervalued and kind of breaks through the rest? I mean, because everyone knows Barstool, especially with, you know, the amount of retail traders coming up, and, you know, then all of their age group loves Barstool.
Yeah. I mean, there's one thing is that Barstool is the Tesla of gambling, or of that space. And the other thing is that, kind of similar to Tesla, like the brand loyalty, you kind of really never know what they're going to pull out. And when whatever they do, they always do it big. It's not like a small announcement. Anytime that we see Dave Portnoy, with his little suit on and announcement time or whatever, it's always something big, and that from now on that'll directly affect game, no matter what it is. So I think that yes, to answer your question in short, yes, definitely. I think that Penn will be the front runner, and that's because, again, brand loyalty and because of how much noise Portnoy makes with everything. I just think that sets them, makes them different.
Well, going back to just the first week of August situation, you mentioned your swings were down bad. Did day trader Hugh make any mistakes? I mean, I like to go really, really heavy cash, and like I said, just had my wish position. I trade around that. But did day trader Hugh make any mistakes in the market, or was it just the swings?
No, part of it is also that I've been doing a lot of things like outside of the market. Just meetings and stuff that I would never take during market hours. They just had to be during market hours. So part of that was like my focus wasn't entirely. So if I took like a day trade, I wasn't watching it directly, and then I would miss where I wanted to sell, or I would miss the price action because I couldn't watch it, and then I would lose. And then I get into like one of those things where okay, if it just gets back up to here, I'll sell. And this is everything that we always talk about like doing. And here I'm just sitting there, screwing it up.
Yeah. One thing I think everyone has been trading Monday through Thursday, and even going back into last week, was AMD. You saw it go from 90 to a little bit above 120. And finally, yesterday, I remember it dying down. We're recording this on Friday. But do you think we're always going to have, during August, that one large cap that everyone's kind of trading? Because that just seemed like the waiter, the UAVS of FinTwit, even though it was a large cap.
Yeah. No, kind of like how in a really hot market, sectors will run. It's similar to large caps. So it could be whatever has the most volume. Like that's what it is. It doesn't necessarily need news, but obviously news usually brings volume. So, when something has news, it's kind of like the 4-day or 3-day rule, kind of like the 24-hour news cycle. So even when Baba, what's his name? Who's their billionaire founder? I'm forgetting his name.
I don't know, but he went missing for a month or two.
Yeah.
A few months back. Yeah. You can't say anything bad about China if you're making all the money in China. But no, we know who you're talking about.
Yeah, exactly. So that created a huge liquidity event and a lot of volume. So similar to that, when whatever large cap has the most volume, most volume, most liquidity going on, that's the one that usually people flock to. But the thing is that what you can't do is that you can't get stuck, kind of like getting stuck holding the bag. You can't be stuck when that liquidity stops. So the second that the relative volume is not pacing, just be done with it. Also, don't swing it. Don't swing these things, because when the volume does stop on them, it doesn't take much for them to, slice through down or up if you're short.
Yeah, not fighting the trend, I think, was something we may not talk
Definitely.
about enough. I mean, just the fact that, there is a power much more strong than you. And just because you're over PDT or whatever accolades you think you might have, the trend is always going to be fucking strong.
Oh, yeah. No, that's a good one. I like that one a lot.
Another
for sure.
thing I was thinking about is, imagine Tesla's stock if Elon Musk went missing for a few months.
Yeah, no.
That couldn't happen here. That's that. Yeah.
See, I still go back to my thesis that I think that eventually he leaves Tesla. Like, I just think that eventually he's an innovator and he's gonna want to leave Tesla. I still come back to that, and I think that day I'll be really interested to see what happens. I mean, maybe that day never comes, but I really do think that he's going to want to focus and innovate on something else, probably, like space. I don't know. I just think that Tesla gets to a certain point to where he's not, it's not going to be, not that it's not going to be interesting to him, but it's so self-running that he can't really, he'll always be able to innovate, but it won't be enough innovation where he'll see more opportunity in space. I don't know.
We'll see. I think he's probably in it for the long haul. But then again,
I mean, his shares are. I don't know if he is.
Well, kind of moving on. It's August isn't as bad as we thought. Obviously, if you play, well, it's not as bad as I thought. If you play, seriously, I mean, I think this is one of the things we were going to talk about anyways, was position sizing. I think maybe you're scaled in too much, man. Maybe you need to readjust your position sizing for August.
Definitely. Most certainly.
So maybe take a listen to this podcast once we're done. And you can reassess your mistakes.
Thank you, Dan. Hugh, do better. I'll start using. Never mind. Anyway, yeah, I think that there's two things with position sizing. Obviously, when you're screwing up, there's that aspect of it, but also I think it depends on what kind of account size you have.
Yeah, because I mean, even though the market was a lot hotter back then, when you have a small account, really having conviction. Obviously, the entry is the biggest thing with your starting position size. You can't be putting in 20% of it on your first one, even if that's only $1,000 of your $5,000 account, because things dip, and that's a thing. But no, I mean, being able to put 5% of your account size into something is definitely a thing. As an entry position, is the thing you can do with a $5,000 account where it's not, the end of the world.
Yeah, for sure. The other thing is that with those smaller accounts is that you had to trade. I think you have to trade around the core more because of the fact that you have a smaller account. Most of the time, smaller accounts want to push it.
Trading around the core is hard if you're under PDT. Well, obviously, we recommend cash account a lot, but.
Well, okay, then, I mean, if you're under PDT, then I would even say, then just take profits even faster. I mean, that's obviously, that contradicts what most people think, because they think that because they have a smaller account, they want to, push it really hard. And I get that. And you want to, squeeze out as much as possible. But that's actually the opposite of what I think I would do, or what smaller accounts should do, because every dollar matters so much. And it's not that with a bigger account, it doesn't matter. It's just that, you're trying to build that account. You really need that growth, because the more money that you have, the more money, you can make on a smaller percentage gain. So, I mean, that's really the way that I would handle it. It's just taking those profits quick.
I think people see the, what is it called? I think people see that thing that's like, hey, you only need to double your money 11 times if you have $1,000 to get to $1 million, with the 1,000, 2,000, 4,000, 8,000, 16, 32, 64, 125, 250, 500. Yeah. But to do that, you'd be putting your whole account in every single time and waiting for 100%. Here's another little math tidbit for you. If you're doing that, you're also one offering away from splitting your shit in half.
Yeah. I mean, especially in a market like this, oh my God, in ATM, let's just say a 50% of the market cap inside a float. I mean, that thing would tank. It would just be, the selling pressure would be insane, because there's just no bids. There's no bids out there. The volume's so low. But that's also what companies don't understand. They don't, and they shouldn't. They also shouldn't be raising that much capital. Does that make sense? They shouldn't be, if the market cap's 200 million, they shouldn't be doing $70 million worth of an offering. But if they were to do that inside this market, I mean, that market cap would be fucking 100 million by the end of the day.
So bad news is kind of amplified in shitty markets. And is good news, is good news just dampened?
Yes, for sure. Because listen, you'll see a faster pop because again, there's really no volume. So you will see a quicker pop, but in doing so, you're just going to see a quick pop and fade. Like that's inside the market that we're in. Like, it's one of those where 9:30, 9:45, you can start in shorting and, and by the end of the day, it's red. That's the kind of market that we're in right now. And I think that we're going to continue like that. So if you're quick with it, and this is the market where RSI is probably one of the most important indicators, because you can see, where it's at. I like to use the 20-day chart and the 180-day chart. And based on those, you can see if we're overbought, if we're oversold. And some of these stocks that I'm looking at, they're getting really close to being, way oversold, which is a really good thing. But understanding that if the RSI is at 30, it can go to 20. Shit, it can go to 15. So you do have to keep that in mind. But in this market, I think that RSI is a really good indicator, which is in normal markets, I don't usually think that, because most of the time they run farther. They'll come back down, consolidate, run farther. So inside this market, I really like RSI.
So do you think RSI may be better because it's saying something is oversold when you as a trader probably think just about everything's fucking oversold? And it's like, hey, be careful. Maybe it's not oversold yet.
Yeah.
Well, going back to position sizing, obviously it applies differently in months like this, but even for the smaller accounts, you gotta think how much conviction do you have in the trade and how much you're willing to lose out of it? Because when it comes to position sizing, I think your trade, your plan has to match up with it. If you're doing 25% of your account in your small account on one trade, whether it be, let's say would you say to do it with a bigger one, or a more expensive stock like Wish, because 25% of a $5,000 account, you're only getting 150 shares.
Yeah. Oh, okay. But here, okay. Yeah. And I totally get that mindset, but I do think that there's a difference because, and I actually had this conversation because the percentage gain is really what matters. I know that you can get more shares, but if let's just say that there's a $3 stock and you have, you have a $3 stock and you have a $20 stock, even though you can get less shares, if they both go up 20%, it's the same gain.
Yeah. Same game. Oh, excuse me. Yeah, no, it's one of those things where maybe it was just beaten to my head whenever I had a smaller account. It was like the only things we were trading were all 20 cents and 25 cents and 30 cents. But he's right. The percentage is all that matters. So, what other things do you know that kind of range out like that right now? You got to know these personalities of these stocks whenever you are under PDT, if you're doing the cash account thing, because trading around the core, like he just mentioned, is that's still what I do to this day. It works out so well. So many other traders do it too. And it gives you that buffer for that swing to, even if it does go bad, you still made enough to cushion yourself.
On TD Ameritrade, they have that P&L year-to-date thing. And I like looking at that because sometimes, intraday, it's down, the stock might be down, 5-6% on nothing, just low volume. And so I like looking at that, like reminding like, okay, I'm up a pretty good amount on this. I can have a little more flexibility, or it'll make me realize like, dude, you can't trade Amazon. Like you suck at trading Amazon. Maybe stop doing that. And so I stopped doing that. And so I think that that sometimes puts it in perspective for me.
But more tips for the smaller account people, when it comes to position sizing. Obviously, for your quick little day trades, when I was a smaller account, I was not like trading breakouts like that. I still don't even really like to trade breakouts.
Yeah, no. With the smaller accounts, okay. So I think there's like a few different levels. Obviously, when you're first learning, like our thing is beer money. Beer money. Lose the same amount that you would lose on a night out with friends, drinking, as you put that into your brokerage account, and then don't go out one night. Boom, done. Okay, that's the best way, because the biggest mistake is when you see Zach or you see us trading, and making 60% of profit, you immediately want to jump in there and start making money. And we all get that, but you don't know anything. Okay. You have to walk before you can crawl. And that's why you really, really, really have to be, you really just have to get in there. And, for 6 months, you just have to be in front of the screens and you just have to trade. And, trade with like a small account. Take a few shares, like literally just a few shares. Even if it's 60 cents, take 10 shares. That's it. Like just get your feet wet. And then once you really feel confident, then that's one of those things where, what a lot of people like to do is, and I honestly have mixed feelings on this, but I also think that it works for a lot of people. So therefore, I feel like I have to mention it. And so what a lot of people like to do is that they like to take 100 shares, no matter the stock price. And that's what they like to do. And that's the way that they keep it super systematic. And at the same time can still manage the risk. And so I'm okay with that. That never worked for me, but I'm okay with that. Now, obviously, you're not buying 100 shares of Amazon, but when they're trading like mid caps, so anything underneath like anything 100 million to 10 billion, they'll take like 100 shares of, and that's fine. That's fine. But that doesn't work for me. But if you're going to choose a systematic route, that might be the way to go. And then I feel like you have the next level. So, 100 shares, I'm going to assume is underneath 5% of your account, by the way. The next thing is that I feel like
you got to think though, if we're talking about a smaller account, 100 shares of something, $10 is
$1,000. Yeah. I'm talking like, so when you're first starting out making money,
we're up to like 50,000.
Yeah, okay.
Exactly.
And I feel like that's good because at 50,000, you can still make some money, but at the same time, you can manage your risk and not, really screw the pooch. Okay, if let's just say that the $5,000 goes to zero, that's gonna hurt. Again, the chances of it going completely zero are probably small, because you're not going to be playing options at that point. But so it'll hurt, but the chances of that are small, and it'll probably be a really good lesson. So that's how I feel like the next tier is. And then I feel like when you really start to make some money, and let's just say your account gets over like 200 or something, maybe 250, you have a little bit of wiggle room. And that's when, if you made 250,000 inside the stock market, either you are incredibly lucky or, you have a really good strategy going on. So that's one of those times where I think, what over that level is where you can really start to have a little bit more conviction. And that's one of those times where, hey, you want to put 10% of your account in because that's what your strategy says. And, then you can kind of do it. You're going to take some bumps, but I think that's where you can really start to push the, pedal to the floor and, maybe up your risk a little bit.
Yeah. And then once you're at that 250 mark, 10%, you're putting in 25K. And then you're a good enough trader where you can see the levels. Obviously, this isn't applying for someone that just throws 250 grand in an account and starts trading. But, you're not going to put yourself in a position where you're going to lose more than 25, 30% of that at max,
Yeah, no, exactly. And exactly. You make $250,000 inside the stock market at all. That's impressive shit. So, you've done something right. And now you can put that, because once you start to really push, the floor of the pedal, it's going to be hard to get you.
What the fuck was that? Okay.
I thought I was doing so good.
I let the pedal to the floor slide because the saying pedal to the metal, but it's the same thing. But pressing the floor to the pedal is so dumb. It's so dumb. It doesn't even. I don't even know how you could even come. I don't know where that came from. And it's like 10 a.m. there. It's not like you have an excuse to just lose. That's obnoxious.
I don't even think they would have noticed.
Floor to the pedal. They would have turned the podcast off.
Dude, whatever. I don't know how I get so many screwed up. It's so dumb.
I'm gonna send you an idiom book for Christmas. A book on all things, maybe just like a 4th grade vocab book. But
anyway,
yeah, go on.
I feel like once you're over that, so if you got to 250 being systematic and managing your risk, after that, you can start to risk a little more. Now, again, it's not going to be easy to get used to. And that's where like, it's one of those things where you should scale up into, putting more of your account in. But those are the times where, you can take a 250 account or, 300K account to $1 million. If it took you a year to make 250, you can, all it will take is maybe 20 good trades to hit that $1 million from there. Because if you're putting 10, 15% of your account in, and again, you're managing your risk, you're being smart about where you're cutting, you can take an account pretty fast. Now, I mean, it sounds great to just be like, yeah, like you can take a 250 to $1 million account much faster. Again, it's not going to be easy to scale into that. Into that area, let's call it. So, I mean, that's the thing. And the other thing is that you should probably have like a cutoff point where, let's just say that the account gets underneath like 220 or something. That's where you should be like, okay, nope, going back to my smaller position sizing. And, with all of this stuff, it's going to be based on your kind of risk appetite and your kind of stomach. But I think the biggest point to take away is that if you are new or if you're a new trader, this is a long game. Okay. This is everything that you want right now. Stop. Your thinking right now is probably opposite. If you're within your first 3 months of trading, everything that you think you will probably change your mind on 50 times.
We just interviewed Doug Bonaparte yesterday. That's why he's talking like a wealth manager. Another nice tip I heard, this is just from someone on Twitter that was tweeting at us. It said he paper trades on Fridays. I mean, that's one of those things. Yeah, good. I think that's not a bad idea. If you have those days, like if every Friday, I knew someone that took off every Thursday. Thursdays just weren't her day. And that I see her, she's trading right now though. But it's one of those things. If you realize every, at this time I suck, or every time in pre-market I suck, every time lunch tips, don't be afraid to paper trade. Like, don't let your ego get ahead. I mean, learning more and not losing money is a lot better than thinking you're learning and also losing money. You're getting the same shit because if you can identify when your weak times are, I feel like paper trading becomes less so, oh my God, there's no emotion involved, to you're doing it for a reason. You're doing it to learn, and you're going to kind of feel emotion with it because you're doing it to win and not exactly to make money.
Yeah.
So moving on to shorting, there's been a lot of chatter about learning to play both sides, and learning to play one side's hard enough. So, and then everyone says don't overtrade, and then now it's like you're telling me to play it up and down. What the hell is what's going on?
I love our listeners like family. So I try and I feel like we're all family. That being said, one of the biggest mistakes
I'm from Alabama, so you know what that means.
That is, oh my God. I've never been to Alabama. One day I want to go.
The beaches are nice.
You also grew up inside a really rich area.
No, I didn't. I went to school in a rich area.
It
was an hour away, dude. I'm not Tommy. I'm not saying I grew up in my car or like I was raised in terrible conditions, dude. No, look, I grew up in big house. Parents loved me. Mom was pharmacist. She had everything I could have asked for, except, I did live an hour away from school, so I didn't have anyone to hang out with. Yeah.
Dude, I complain about walking 20 minutes.
Yeah, I drive every day, an hour. Like, my parents wouldn't even let me drive to school until I was 17. That's how far away it was.
Wait, you could drive before? What age can you drive?
15, you can drive with an adult driver's permit. 16, you can But it's Alabama, so technically like 11 or 12. As long as your blood alcohol content's below like 0.08, yeah, you 11 or 12 is probably fine.
Nice. But I think, yeah, so going back to it, one of the worst things that the whole point of this, one of the worst things that you can do is that if you're not if you're not making money, to go look for a different strategy to make money. If the strategy that previously made you money isn't making you money, chances are the strategy that you're trying to go do will not make you more money or will not make you money. Maybe it will, but I feel like inside a slower market like right now, people all want to short because they just want to make money. That is a terrible reason and probably will lose you more money. You have to handle it the same way that we just talked about handling any other strategy. If you're coming to this game immediately to make money, you're probably going to, which we all are, obviously. But if your expectations or your hope is to come and make, I'll call it money that will make a difference in your life. So I'm talking like, $1,000 or and above. You're probably going to get smoked. So that's going to be my cautionary tale before we go into shorting, is that if you're one of those people that tweet us that you want to learn shorting and stuff, that's fine, but please take it the way.
Learn long first before you learn short.
Yeah, exactly. Because shorting has way more risk.
Yeah, if you don't have your hammer on your tool belt, there's no need to throw like a wrench. That's probably so stupid. That probably made no sense.
Everybody better roast you on Twitter.
The hardware and construction side of our listener base is gonna fucking destroy me about my tool belt metaphor. But shorting. It just seems like if I was a newer trader and everyone's like, "Hey, August sucks. Why not take my exact same things I'm in right now and just short them for the month?"
Yeah, it sounds great, but it's one. Oh man, I'm about to fuck this up. I was gonna say it's like that 7-foot basketball recruit that looks great on paper, and then you put a ball in front of him and he doesn't know how to dribble.
Okay, that's fair.
Was that right?
I've never heard it before, but it made sense.
What's up? So I think that's the same thing, is that like, oh yeah, like if I were to just go on short, okay, but what happens, when you do have a green day and it swipes up against you, you're going to be sitting there wishing that you weren't short, and also so here's for anyone that didn't realize this, when you're short, your risk is maximum. Like there's literally
no ceiling.
When you're long. Yeah, there's no ceiling. When you're long, your risk is zero. Okay, fine. You lose your investment. Yeah, what you paid. When you're short, the stock could go to 10,000 from $5 if it wanted to. You would not only would you lose your entire investment, you would then owe money on top. That's a scary thing to think about. It's kind of like being on margin all the time. All the time. So, that's the first thing. So, I just can't stress that enough, that your risk is absolute.
I'm only doing it for day trades. I've never whenever LT&C was having its thing and everyone said people are paid bashers, shit like that. I don't think.
Who would pay us?
Yeah, no,
shorts? Like someone slid inside our DMs?
I don't know. Apparently, George Sharp, maybe. I don't know.
Was he even short, or was he just really?
I think he might have just been. I didn't even know you could short OTC shit.
It's probably really expensive to short.
They're gonna be listening to whatever. But
yeah,
no, swinging with conviction on shorting. I know I asked Zach about this, but it seems like in theory, if you see something that, hey, this is overvalued, even if it was like this is. Buy the rumor, sell the news, and you just see that. You see it's priced in, like whether it been like CCIV, which is now Lucid, whenever they announced the merger, it went from 60 to 20. And you could kind of see that. It had been pumped up so much.
Yeah, no, I mean, there's only been two things that I swung short. Nicola was the first and mRNA was the second. And that's because, I mean, they were, I don't want to call them layups, but they were kind of layups. Besides that, I really would suggest, not swinging short.
Yeah, because I mean,
unless
buy the rumor, sell the news. This could definitely end up being buy the rumor, buy the news.
Yeah, and exactly. And so that's one of those cases where options may be better. Because again, at least you're only losing your investment. But it's way better losing your entire investment than owing. So if you do feel like something's going to be a buy the rumor, sell the news, maybe go like a low del, close to maybe like 2 months out from expiration, put that could potentially be in the money, maybe like 3 or 4% out of the money. That's something where I could see options making more sense than going short, because I mean, you really don't know how the market will react to some things. I mean, technically, I think what was it, like Microsoft beat earnings, and I mean they were down like 4%. So so if you were long, on them beating earnings, or let's just say that like something like AMD, if you feel like AMD is going to continue to go down and you're short, and then all of a sudden, it rips. I mean, you could just get chopped up. So that could be one of those instances where I feel like options might be better.
Yeah, I mean, I always prefer options over shorting, but when it does come to shorting and just using when I was talking about AMD earlier, I mean, it had all the ups, and then you could play almost every single candle. You could tell when it was overbought. Whenever you're day trading, do you take shorts and or is that just like, okay, I'm already doing it on the long side? Because it becomes a point where it's it's exhausting. You're like, okay, buy 10,000 long, or sell 10,000 short. Oh, it's like, holy shit! Like, can I catch a break?
Yeah, I also don't have the confidence on the short side. So like anytime that when it upticks, I instantly cover. I don't have the confidence because I took like bigger losses when I was shorting, when I was doing more short stuff. So anytime that swipes up against me, I instantly cover. And then even when I'm up on a position, if it swipes up, I instantly cover. And then it's like a small win, and you have to pay for the locate, stuff like that. Yeah, that's the other thing is that shorting is expensive to do. You're on margin because you're borrowing the shares. And the other thing is that if you're shorting most things that have a smaller market cap, then you have to pay for the locates. So you have to pay for to be able to do the shares. And then most of the time, brokers will also charge you a transaction fee. So, if you're shorting 100 shares of something, it might cost you $100 to locate those shares. And then every transaction might be $3. So every time that you buy and sell. So even before you make any money, or even before you place the transaction, you're down. So at the very minimum, even if you were to cover for flat, you lost on the trade. So I think that that's really important, and another aspect to things. So, I remember like some of the things I used to locate were like 20 grand, just to buy the shares, like literally just to be able to use the shares. And that's why I have like over $250,000 in commission, right now that I paid in commission. And I mean, I don't short that much. Like I know some of those short guys, like they do millions in commission every year.
Yeah.
Millions.
So, I mean, there are two definite ways. Obviously, no one likes my idea of shorting and swinging, but it'll catch on. Someone will like the idea.
And now, the one thing that I will say is that
Capital likes the idea.
Melvin, yeah, there you go. The one thing that you can do though is that if something's really catching, let's just say something's really let's just say that a lot of volume comes into a stock because someone's pumping it for no reason, then it's going nuts. And it's really, the RSI is at like 95. Though that's one of those times where you could scalp a short, and that's probably lower risk to reward. So if if the RSI is at 95 and, it's kind of looks like it's breaking down a little bit, your stop's at high day and then you short back to VWAP. That's a really simple strategy. to scalp short. And that's probably the one that I would start with like one share. Because you kind of got to get the feeling of it. You know what I mean? Like you kind of got to get the feeling and the personality of it.
Getting like simple strategies like that is a really good idea. And just for anyone that doesn't understand, it's basically saying, hey, if this does break high a day, when we already saw it breaking down, minimal risk, because if it does break high a day, it's probably going to keep going up again, charting 101 with Dan. So yeah, just having that available, minimizing risk, and also, having a reason behind that minimizing risk. Moving on from probably something we know a little bit more about. El Professor asked us, analyst price targets and how they are garbage. He said MVST was given a $6 price target yesterday. I'm going to give that a little look. It is now at $12.36. I wasn't expecting that. So looks like they were, trading around 8 or 9, and they gave a $6 price target, and it proceeded to double in price, or go up around 75%. I think we've asked about this on other interviews, and some people say, some analysts are just hold more weight than others.
Yeah, definitely. For the analyst role, and if you're an analyst, I'm sorry. It's somewhat useless. in most ways, it's useless.
You're glorified.
It's that's pretty much what it is. Like, I thought it was funny. Someone commented underneath like one of my posts, and I was like, yeah, like I could see this thing going to like it was TRCH. I was like, yeah, I could see this thing going to 5. And he was like, what's the difference between you and like a Barclays analyst? And then someone else commented like, Hugh doesn't have a Series 7. And they're right. And then it really, I kind of chuckled because I was like, yeah, I guess there's really no difference between me and an analyst, besides the fact that he has a Series 7 and I don't, and he's employed by someone and I'm not. So I think that I do chuckle at that. I think that that's really funny. But as far as the analyst role goes, 99% of them are useless. There are ones that I like to pay attention to. And for instance, that's going to be like someone, for instance, like Barclays, they have a direct department for their biotechs. So there's someone who got their doctorate, and has a finance background, and now they give price targets based on what they feel the protein is for the whatever stock it is, or whatever drug it is. So with that, I do like people that specialize in certain fields because they're giving a price target that makes sense. Yes, this protein, it will add 300 million to the market share every year. And I think that's going to get approved because of this. That makes sense to me. Some guy from JP Morgan, no offense, love JP Morgan, giving a price target because they just, most of them don't have real basis around it. Yeah, they'll write a report, but that report has no guncture. That has no to it. There's no meat and potatoes. And those are the ones that really piss me off because it doesn't make sense. You can't sit there and tell me that that you don't we don't feel that they're going to increase sales. Why? Because we don't feel it's a need for the market. Why? There's no market data behind there. Now, maybe they have market data that they've done on their side and whatever, and they don't want to release that, and that's fine. But I just don't like, I don't like putting so much weight on an analyst price target if the report really doesn't have any DD behind it or any real reasoning.
All right. Well, next question. Different news scanners. I think most people use trade ideas, and Zach swears by Benzinga Charlie. Obviously we're gonna have to do a different episode if we're gonna really go deep into them. But for news scanners, are those the two main ones you agree with?
Yeah, definitely. Benzinga Charlie trade ideas for, volume scanners and stuff like that. Yeah, that makes sense to me. I also do like scans for news. I like that as well. It's really just your preference. I mean, I just have a bunch, honestly, I don't need a bunch, but it's just, at this point, it's a convenience thing. It's one of those, I can go to scans because I know how to use that one quickly for this, or I can go to Benzinga Charlie for this, stuff like that. I think that, so I think that any of those will be good. But personally, I just know that I have different ones for different reasons.
All right. Well, what news is good news and what news is noise? I think this is a good one because, obviously this is one where it's a screen time thing. And it's also knowing if it's just fluff news as in, did they already announce this? And it's just like a reminder.
Yeah. So I think most analyst price targets are noise. Also, anything that isn't going to directly affect the company and the fundamentals. So again, if a company gets a let's just call it like a contract. If they get a contract and the contract is, let's just say that they have $100 million market cap and the contract is for 400,000. That's not really going to do much. That's fundamentally not going to move the needle. That's not going to make their quarter. In fact, it'll be nothing on the bottom line. So with that, that's something that to me is noise. I'm not going to trade that. If it gets bid up super high, that might even be a short. If it goes up, if in a crazy market, if that stock goes 100%, then on something like that. That instance, then that might even be a short. The next thing is a lot of smaller cap companies will come out with a lot of really nonsense press releases, like Sava. I got smoked on Sava, but it was we may potentially have good data for our phase 1 in the future. That says nothing. That doesn't, again, that doesn't change the fundamentals of the company at all. So when reading news, you have to think, okay, is this going to add value to the company? Something like adding a senior vice president. Now, if they have a really good name, and not their name, but if they have a really good resume, that could change something. Especially if, let's just say, a drone company adds like a drone company, or let's just say that a airline company adds a drone manager from, a massive drone company. That's something that could fundamentally change the company, because why are they hiring a drone guy? Are they opening up a new department? What's going on here? That's one of those times where I could see that, being a fundamental change. So that's what you have to ask yourself when reading news. Is this going to fundamentally change something for the company?
All right, next one is how to play earnings. Often companies crush earnings but tank. I actually don't like playing it with commons too much. However, I think that is a fun time to take lotto calls or lotto puts, money you wouldn't mind risking, and shit could explode. I think that's just always how I play it, and it's just fun money, and I've seen it, work out, and I think I've made more money than lost. So.
Yeah, don't trade earnings. Just don't trade them. It's too difficult. You don't know how the market's going to react. Most of these stocks have had a pretty good run up. So even an earnings beat is making them not tank, but is making them fade a little bit. So there's too many risk factors. There's too many variables. What if they decide to also do like a share restructure or something? Like, you just don't know. That with earnings report usually comes news, and it could be good or bad. It's too much of a gamble. If you want to take a gamble and you want to take like 1% of your account and gamble on options, fine, whatever. But don't play earnings. It's too difficult. You're guessing. You'll lose more times than you win.
Yeah.
If anything, you can play the earnings after the move happens. So if they do an earnings beat and the stock's down 6%, like something like Amazon, you want to scoop up cheap shares, fine. Do that. But don't play for earnings. Play after earnings, after the initial move.
All right. Trying to be a full-time trader when you're doing well, even though your family and friends think it's gambling or dangerous. A, tell your family and friends to fuck off, or B, don't tell your family and friends you're trading. And also, C, my preferred one is show up to Thanksgiving in a Lamborghini. You can rent it if necessary, and then say, how's this for risk management?
Yeah, and then you have a year to actually make Lamborghini money. It's like it's kind of a no-brainer. No, but on a serious note, I'm going to kind of refer to Gary Vee on this one, because if your family doesn't believe in it and you're underneath their household, well, then you have to follow their rules. I mean, that's how I always grew up, is that when I was underneath that household, mom's gonna be pissed at that. When I was underneath, mom's household, it was her way or the highway. I got a lot of support for things I wanted to do, but let's just say that I wanted to go do drugs, like that wasn't allowed underneath her household. So I don't know, like that. So that's,
to do drugs, he'd have to move out. As long as
I would.
Yeah. So, if they're providing you with shit that you need, like you wouldn't be able to live without them, and they're telling you not to trade, well, there's only one thing you can do. Hide the fact that you're trading.
Yeah, you have to hide the fact that you're trading and wait till you move out. But here's the thing, is that
like
you shouldn't become a full-time.
You're trading stocks on the stock market. Tell your parents to piss off.
Well, don't do that, because then they're gonna be pissed at us. Because you imagine like little Johnny, like, Mom, Dad, like, Dan told you to piss off.
You've been listening to that damn Going In Raw podcast too damn much, and now you lost all our fucking money on expiration options or whatever the hell you called them.
On a serious note, though, if your family doesn't, first off, you shouldn't be trading until you have a nice nest egg. And what I mean by that is like not like a retirement net. Well, yeah, that wouldn't be bad either. But something you should have 6 months minimum, because minimum before you go full time. And don't go full time until you prove to yourself that you can make money. It's not one of those things where like if I just had more time, I could make money. Because in 99% of cases, that's not the truth. In fact, my best trades are usually when I'm not looking at the computer and I set sells super high and I wait for news. Like if I did that, I'd probably be significantly more rich. So I think the biggest thing is that, if your family doesn't like it, study while you're underneath their household, build up enough capital, and then, like we said, go small. And then once you prove to yourself, then you have to decide if it's the right decision for you to move out or not, and so if they're supporting you, then you have to do what they say. There's just no way around that. You have to.
Can y'all, oh damn, these are both the same guy. Holdo Baggins, damn it. We're going to answer both really fast. Can y'all talk about the ways that you track your progress at the beginning, find patterns in your own trading, and create and keep rules to follow? I used a whiteboard. I swear to God, I had a whiteboard and I wrote on it. And I wrote like what helped me, what didn't. And I think just being able to say, hey, this fucked me this day. This worked the next. And just finding your strategy obviously is super big. I don't think tracking it like that is necessary. But if that's how you learn, hell yeah, Excel sheets are dope.
Yeah. I just have a desk full of notes and stuff. You can't even open some of the drawers. So that's how I learned. And it wasn't like I just, it was like disorganized chaos, or wait, that's not what I'm looking
close
for.
Enough.
Yeah. So that's going to be the biggest thing that I track my progress for. And also, using TD is like, actual progress, for the money wise. But I also think that, if you're learning, then you're making progress. So just keep good notes, write down everything or type everything, and so you can come back to it.
Okay. Last one. Same guy. Maybe talking about overnighters for traders under PDT who aren't trading options. What's some good rules of thumb for holding the position overnight? Okay, so the biggest one obviously is not to sell before the market closed. And then whenever you wake up, you're still going to be holding the position, and that's holding overnight. Have a great week. No, I'm just playing. But no, I mean, it just depends. Like, why are you holding it overnight? If you're only holding it overnight because you're not allowed to sell it because you're under PDT, my solution to you would be switch to a cash account. But if something you're swinging and you're trading around a core position, which is obviously hard if you're on a margin account, yeah, then I don't really have an answer for that.
Yeah, honestly, if you have a small account, just don't do options. Just listen. Learn
I don't
long
know
game.
why you mentioned options. You could have asked that questions without mentioning options.
Just learn the long game, and then as far as holding overnight, I mean, if you're not swinging something for a catalyst, and you feel like it's going to gap up overnight, why? If it's running into after hours, maybe it'll gap up. But most of the time, at least take half off. I mean, the only reason I hold stuff overnight is because I'm swinging it for the catalyst or a catalyst. So if you're not swinging for a catalyst, I don't think it makes much sense.
I would really recommend to just about everyone under PDT, if you haven't given it a shot, try a cash account. It's a completely different game. You're basically trading as if you were above 25K. It's just you run out of money by noon sometimes, and it'll give you that patience needed to not overtrade. You won't revenge trade because you're not allowed to past you'll run out of money, and then by the time you get to like 18 to 20K, you don't really see that issue. You aren't really running out of money unless you're just trading breakouts for very, very quick scalps. So last but not least, we are signed to iHeart Radio. Not much to change for you guys. Just we're super hella rich now. And I mean, that's about all it really is to it. Work hard, believe in your dreams. And iHeart Radio. That's good.
Yeah, I mean, pretty much the only, because we saw a lot of things, so we just wanted to clear it up. We're still going to do our Sunday, Wednesday episodes. Not much is going to change. They're helping us so that we can focus on creating really good content for you guys. And we don't have to worry about ads and stuff. They take care of that.
Yeah.
They just give us a little fat check.
There may be growing pains, as our manager describes it. We are building the plane while flying it. So
that was good. Yeah, he's a smart dude.
So
he's a smart dude.
There may be some issues if they put too many ads or anything. We'll snap at them, so y'all don't deserve that. But all right, guys, you know the deal. We love 5-star ratings; those make us happy. We like likes on YouTube and subscriptions, and we've been recording hella interviews, and Hugh is going to Egypt for a couple weeks. So
if you're in Cairo, hit the boy up.
Yeah. So if we have any Egyptian listeners, make sure to show them around the pyramids. But yeah, no, we're gonna. So even when he's gone, and I planned my move around that time too, so I can be moving, he can be in Egypt, and we'll be dropping, fan favorites, whether it be PJ, Gary, and Tommy, or Mr. Meme, Doug Bonaparte. So we're gonna have all those ready for you, and we love you guys, and we'll see you on Wednesday. Peace.